Hello everybody and welcome to TradeStation's Market Review. My name's Simon Clarke from Trade with Precision, and we'll be taking a look at the markets and how they fared over the past week since our last analysis and what we can expect in the sort of forthcoming days and week or so. Now, if we come and take a look at the mini Dow, last week we were looking at two key levels in this market, 17,400 and 17,750. The market had just come down, it had bounced off 17,400 and it was just coming back up towards 17,750. What we're looking for is if we're going to get some more bullish price action, we're looking for this 17,750 level to get broken and possibly for a move up here towards 18,000 again. Since then, what we can see has happened is the market has broken the 17,750 level, but it's now pulled back right to this area. So for the bulls, we're still looking like we've got a uptrend here. We've got the market's just made a higher high, so we've got a low and now a higher high. Maybe 17,750 could be a good area for the market to potentially find support here. So let's come and take a look at the 4-hour chart and start to see what else we've got. So coming down to the 4-hour chart, we can see our sort of 17,750 level. We see our 1800 up here, and we've got our 17,400. Now there's a couple of other levels that we've identified on the 4-hour chart. So we can see 17,900 where the market sort of tested recently over the past week is a pre sort of level that the market's tested a number of times. And we're right back here at 17,750, or just underneath it in actual fact. In fact, the momentum here on the market intraday is more weaker. We've got some divergence here on the markets, certainly clustering with this high at 17,900. So, you know, a pull down here down towards sort of 17,550 is the next sort of line in the sand, the next sort of market structure level that we've identified. So we've got certainly sort of a couple of levels in here where we could start to look for trading opportunities in between, and it really sort of remains to be seen how the news flow and how the market reactions to that unfold over the next few days. So for me, on this market, what I'm going to be looking for is more intraday plays and intraday positions to trade in between these levels, because if we still get continued bearish momentum, then we've got quite a distance here, several hundred points, that the market could move down towards this sort of lower structure level. So I'll be looking for sort of intraday opportunities to take a piece of that sort of price action. At this moment in time, I'm not looking for new sort of swing positions on the mini Dow future, although I do like the sort of prospect of a retest up here towards sort of 18,000 at some point in time. Now, if we come and take a look at the other markets, now we looked at crude oil last week, and crude oil, again, couple of key levels on this market that we were looking at, which was 47.50 and the sort of 53 area. The reason being is that if we start to look at this market, if we come here on the daily and start to look at this trend, we've got a nice bullish uptrend on the daily chart. Moving averages all in the right order. We've got some good convergence on the indicators here, although the market's just, or the sort of indicators just started to flatten out here, just indicating that momentum is starting to weaken here. But the market has come up to a key level, which is around that sort of $50 level. So it's a key sort of psychological level, and in fact there's a couple of levels that we could mark in here. One is around that 49.50 area, just underneath the sort of area here. So sort of 49.50, that sort of area. We've got previous support here, which could become resistance, and we've also got that key psychological number. Having said that, we've still got sort of quite a nice trend structure here, and I'm not sort of really too concerned about this unless the 47.50 dollar level gets broken, and we can see that a bit more clearly on the 4-hour chart in a moment. To the upside, I still like up here towards the 53 level. We can see that that's the next sort of market structure level that we've seen where we've had prior support and resistance in the past, and beyond that we're getting up here towards the big $60 level as well. So let's come and take a look at the 4-hour chart. So taking a look at the 4-hour, we've got our 47.50 level marked in, and you can see how price has reacted around that more recently. It's been sort of quite precise. So a bit of a pullback here wouldn't be, I'd still be quite okay with this to the for a bounce off here to the long side. But if 47 gets broken, then we could be looking for another move down here, a bit more of a deeper pull back into sort of 44. The 47.50 level, by the way, also is the previous swing low on the daily chart. So if this level gets broken, then the trend structure on that daily chart also fails as well. If we come and take a look at gold now as well. Now gold, we were looking at this as a 1260 level here. This has been a nice sort of support and resistance structure on gold for some time. The market's broken 1260 now, and it's fallen down to the 1210, 1215 area, which is what we were looking at last week. So it's back to this level, and the question is now, what now for gold? Are we going to get a support here, or is the market sort of going to break further? Now, if we come and take a look at the higher time frames here and start to take a look at the monthly, if I just sort of mark a level in here around that $12 level, we can see that this market has been previous support and resistance going back many years, back to sort of 2010. This market sort of found support and resistance around that $12 level, and we happen to be right there at the moment. So if I sort of scroll out of this and we start to mark a level in here around that sort of $12 level, you can start to see how precise the market has tested this level. It's been support and resistance many times, and as I say, being right back there at the moment means that I wouldn't be at all surprised that the market might find support or resistance around there, expecting some kind of price reaction. So if we come down to the lower time frames, we can start to see here, let me mark in that $12 level. We can see that the market's come down, it's bounced off the level. That's been supported here with divergence in the markets too. So we've had some bullish divergence and the market has retraced back up. So I'm expecting more consolidation, more retests of the 12,000 level, sort of 1200 level here rather, and looking closely to see how this sort of plays out. If we get a break below 1200 here, then we could be looking for a much sort of deeper pullback down here towards the sort of 1170 area and beyond. So keeping a close eye around that $12 level on gold. Okay, so let me just tell you about the webinar events that we've got coming up at TradeStation over the next couple of days. In fact, the next session here is this evening in US time. So this is US Eastern time from 7:30 p.m. till 8:30 p.m. This is Trend Trading the Momentum Edge. You can join this webinar by navigating to the TradeStation International website. Come across here to the webinars tab and you come to live webinars, and then you can click on the event to come through and register to join. It's free of charge, it's an hour long. You just fill in your details here, you'll be sent a registration link, and working through this webinar event we will be taking a look at how we can start to use some of the techniques that we use here in our own trading to be able to build trading decisions and to be able to make sure that we're trading with the momentum of the markets. So we look forward to speaking to you on the webinar. I hope you found this useful, and certainly look forward to speaking to you next week as well. Bye for now.